Good afternoon. This is Robert Sinn, and it's a pleasure to present to you today at the September 2023 Metals Investor Forum in Vancouver. Today, my presentation is going to be focused on profiting in the junior mining sector, keys to stock selection. Forward-looking statements. Starting with two quotes, and actually the first quote from Warren Buffett is one I used in my May presentation. The stock market is a no-called strike game. You don't have to swing at every pitch. You can wait for your pitch. And due to the cyclical nature of the junior mining sector, I think this quote is very apropos. And I think it's something that investors should remind themselves of on a regular basis. The second quote is from Chester Millar, who was a investor and an entrepreneur in the mining industry for many decades. Markets rise on mystery and decline on history. And again, particularly relevant to the junior mining sector, where sentiment is the number one driver of share prices, and speculative fervor can cause big run-ups in company share prices and then decline when news is released and doesn't exceed investor expectations. So these are the fundamental factors. I would assert these are sort of the rules of the game we are playing by choosing to be investors and speculators in the junior mining sector. So key characteristics of the junior mining sector. I'm going to go through the white points very quickly. These bullet points are sort of just everybody knows them. They're facts. We don't need to really delve into great detail, especially when we only have 20 minutes. We'll focus on the lower three. We know it's a highly cyclical sector that is prone to wild swings in sentiment, and I would assert junior mining is not a buy and hold sector. Companies in the junior mining sector almost universally do not produce revenues or profits, and it becomes more difficult to gauge what the valuations of these companies should be. There's no quantitative data or very little quantitative data with which to assess them. And a lot of the inputs to that quantitative data is constantly changing, i.e. metals prices and forecasts for the prices of commodities. Highly sentiment-driven sector, and due to the fact they don't generate revenues or profits, there's an ever-present financing need and financing risk. Large mining companies are only interested in acquiring the biggest projects that have very large scale. So really, why should an investor mess around with a company that has a small scale project and targets that are smaller scale? We should focus on the biggest targets with the largest scale potential. Share structure is critically important, and I'm going to get into that when I talk about why junior mining is a people business and the importance of management teams. Obviously, it's an extremely high risk sector, and the rewards can also be very high. Everybody says Great Bear as a great example of the upside potential that's possible. 1 in 1,000, but yes, there are 100x opportunities in this sector, and there are also opportunities to lose 90% or even 99% of your investment. Huge variance in potential investment outcomes. So getting into the point of today's presentation, these last three bullet points, liquidity and the lack of it, are key factors in the junior mining sector. The illiquid nature of the sector limits who can participate and can potentially favor smaller retail investors. Second bullet point, due to the highly speculative nature of the sector, junior mining is a people business. And again, less quantitative data, a lot more qualitative. And the company's management team, that would be a qualitative factor. And getting a gauge on who they are, what their motivations are, what their core competencies are, their skills, all very key. That means that the management team and financial backing of a company are probably the most important fundamental consideration for a prospective investor. Again, the teams with the best track records that have done it before, that have a large network, will have the lowest cost of capital. Very important factor. Finally, I would assert that today retail investors, small investors have the best opportunity to do well in the sector than they have ever had in history. The playing field is as leveled as it's ever been due to the information age, social media, and the hyperspeed that we receive our information in today's world. But don't believe everything you read on the internet. Remain skeptical and verify. So, liquidity. How does it play a role in the junior mining sector? Well, simple example, $1 billion hedge fund really can't invest in the sector very easily. For example, if they tried to take a position in a $10 million market cap company, they would find very difficult to do it in any meaningful way, and certainly not without having a huge impact on the company's share price. Even if they managed to take a 20% stake in a $10 million company and it went 5x for them, they generated a 5 times return on their investment, it would only equate to 100 basis points of total return for this $1 billion fund. Really not worth all the risk, all the effort involved in trying to play in this space, right? Maybe they can invest in the $100 or $200 million market cap companies, certainly the $1 billion companies, but there's not a whole lot of them. And usually when we think about junior mining, we talk about companies with market caps less than $100 million. It's important to understand when certain segments of company shares become free trading, when they unlock and they could find their way into offers and sell orders in the actual market. And we're going to look at a good example of that. One of my favorite setups is actually when a financing closes, a company has gotten in this new capital, this fresh capital that they can use to explore, to pay for a drill program, maybe do some marketing, and it can create a nice lift in the share price in that 4-month waiting period until those private placement shares come free trading again, right? We're going to take a look at a couple examples of that. One of the tried and true tendencies in the sector, seasonal tendencies, it happens almost every year, tax loss selling. So there's periods of extreme illiquidity that can generate the best buying opportunities in the sector. We might be about to see another one of those here in the next few months. Oh, fun. Finally, there's an overwhelming tendency for investors to sell the news because good company news creates more trading volume in the market. And that gives other investors the opportunity to exit. They might have been waiting for months or even years, and they need the money for something else. They see a better opportunity or what have you. There's always 100 reasons to sell, only one reason to buy, but there is a strong tendency to sell the news. We're going to look at an example of that. So first one, private placement free trading date. Great example from a company that's at this conference, West Red Lake Gold Mines. So 20 million shares unlocked earlier this month. You can see it right here. And you can see what happened several days that led up to that free trading date. Big dump in the share price. But then look at what happened once those shares came free. We got a big lift in the share price from 42 cents to 75 cents in 2 weeks. So what happened there? Well, kind of interesting. Maybe the market overcompensated, got oversold there for this free trading date. And the company just happened to be attending 2 conferences in Colorado this week, the Beaver Creek Precious Metal Summit and the Denver Gold Forum. Bam, bam, a lot of marketing, a lot of good results came out this week. Probably not an accident that it was timed, all that good stuff was timed for after the free trading date. So sometimes a big free trading date like this one, where you have a lot of shares coming free that are in the money, can create some trading opportunities in the market. Post-financing uplift trade. So a really great example, Surge Battery Metals. So this is a lithium explorer in the western part of the U.S. They closed a $7 million financing in June. And you can see it was kind of sleepy summer trading there for a couple of months, but Surge Battery Metals gradually began to make a series of higher lows and higher highs. An uptrend started to form, and obviously anticipation of assays and drill results and more news, more big market moving news led to this very powerful uptrend that we've seen in August and September. And so these shares still haven't hit the market. They will in October. Maybe that's something to think about, in the future. But right now, very strong uptrend in surge battery metals, and a great example of the post-financing trade. Another one, VR Resources. So Diamonds in Ontario, Canada. They closed the financing on May 9th, $1.9 million private placement to pay for very deep drilling at the Northway, Kimberlite project in Ontario. Northway could be a new diamond find in Canada. We don't know for sure yet. Still, the jury's not out on that one, but it's definitely very interesting. And just the speculation, the anticipation of what could be, again, that sentiment, buy on mystery market environment, we got a double in VRR over the span of 1 month. Great example of the post-financing trade that can take place for a drill play. A couple of potential examples from companies at this conference. Lorenzo Gold and San Lorenzo Gold. So I own San Lorenzo shares. I don't own Lavros, but I think Lavros is very interesting. Lavros is due to close a financing shortly with assays pending from a number of holes at its LDS project in Brazil. LDS is a blind discovery of an intrusive hosted gold system that's only 150 meters from a known gold deposit. How could this happen? Well, faulting, down-dropped block due to faulting, and you have basically another segment of this gold system that's completely undercovered, never been drilled before. Boom, new discovery, and of course, the mystery of how big it could be. So maybe once they close this financing, assays start rolling in, next phase of drilling comes about. Who knows? Maybe we could have another one of those trades here in Lavros Gold. San Lorenzo Gold, I am long this one. Financing closed, and assays are due any day now. In fact, like literally any day. It could be Monday, it could be Tuesday. And the company is intending to use those funds it just raised to commence the next phase of drilling at its Salvador property in Chile. This looks like a potential copper gold porphyry target in Chile. The hole that has us very interested in this, returned 112 meters, grading 1.44 grams per ton gold and 0.14% copper into a pretty large target area that is also essentially a completely blind new discovery. So San Lorenzo at this conference, also a very interesting one that might have a similar response to something like a VRR or a surge battery metals. We will see. Periods of extreme illiquidity. Of course, tax loss selling season. I mean, this is like the no-brainer, but it happens basically every year. Some years are worse than others, of course. If I had to guess, this year is going to be pretty bad, just based upon how things have been going in 2023. 2022 was also pretty bad. This is an example, AU, Orion Resources. You can see big drop off in August and September, floundered around for a couple of months, put in a higher low here in November. I think this was probably some tax loss selling right here. Illiquid market, pretty low trading volume, dumped down under 40 cents very briefly. And then look, closed the year above 60 cents. So more than a 50% move higher just in the span of about 5 weeks. And then if you held it till early April, you caught a nice cool double. And tax loss selling isn't only isolated to junior mining. Biotech microcaps can experience even more pronounced tax loss selling. Satellos Bioscience, also a venture company in Canada. Look at this chart. Ugly finish to 2022, but it bottomed out at around 20 cents at the end of the year, the final couple months of 2022. And then look at the lift it got once the tax loss selling was over and we entered a new year. plus 300% in Satellos Bioscience. Pretty good trade if you took advantage of that tax loss opportunity there at the end of the year. Sell the news. We always hear about selling the news, right? And a lot of newbie investors will sit around and see the company that they own shares and put out great results, or at least what seem to be great results, and then they're dumbfounded. The stock trades down 10% on the news. I thought it was good news. Why isn't the stock up? Well, there's an overwhelming tendency, especially in the junior mining sector, due to the illiquid nature of many of these stocks, for investors to take profits or just take an exit when trading volume spikes up. When does trading volume spike up? Well, when the company puts out news. Snowline, great example, one of the market leaders in the gold junior mining sector in Canada the last couple of years. They put out news just 10 days ago, 256.2 meters of 2.2 grams per ton gold and 517.9 meters of 1.1 grams per ton gold. These are jaw-dropping gold intercepts. Incredible news. Look at what happened. Here's the news. Here's the reaction. Selling on the news. Now, it might not just be selling on the news. It might also be, this is part of the seasonal trade in the Yukon stocks. Remember, in September, people tend to hit the exits in the far northern companies, the Golden Triangle, the Yukon drill plays. They hit the exits for the winter as the drill season draws to the close. So there could be a couple factors involved here, but also just look at the chart and look at the run-up that Snowline had from March through August. So obviously the bar was very high for them to jump over going into that news on September 11th. Management. Management is absolutely critical. And these are the key characteristics of highly effective management teams. The first one is integrity. Examples of integrity, well, telling the truth is a pretty simple one. Under-promising and over-delivering. I can't stress that one more than most important factor. CEOs should look to underpromise and then exceed investor expectations on a regular basis as much as they possibly can. And then obviously not awarding excessive compensation to themselves and other management team members. Those are all key examples of integrity, in my opinion. Skills. Does a CEO's skill set match the company they are leading? Does the company management team have a group of people with complementary skill sets? So a good example is you might have a CEO who's more capital markets focused, who has more of an experience in capital markets. Well, then he should have other management team members that are more technically focused on the exploration side of the business. VP of exploration, maybe chairman, maybe COO. There's lots of possibilities there. Best case, the CEO is well balanced and good at both roles, on the technical side, on the exploration side, and on the capital market side. And I'm going to introduce you to a CEO just in a little bit that is one of those. Alignment. Is the management team aligned with shareholders? Do they have skin in the game? What is the cost basis of their shares, and how are they incentivized? So very important for management team to be aligned with shareholders and not be looking for a quick exit or looking for a better opportunity. You want them to have skin in the game and be incentivized to achieve major milestones that will de-risk and advance the company's projects in the future. Also, it's important to understand the cost basis of management shares. If they got 98% of their shares at a penny or a half a penny due to the founders rounds or what have you, that's obviously not as aligned as if they paid market prices or close to market prices for their shares. Focus. Is the CEO of the company exclusive to this company, or do they have multiple management roles at different companies? There are plenty of examples in the junior mining sector of CEOs who are CEOs of 2 companies or even 3 companies, sit on 4 or 5 boards. And that's just stretching their bandwidth that much more. You know, frankly, if you're on the board of 5 companies and CEO of 2, how much time can you really give to each one? How effective are you being? Why does the CEO have to have so many roles at so many different companies, aside from just wanting more money and more options? Important to have these conversations with company management teams. What is their level of commitment? So ways to show level of commitment is this is your sole focus. This is your sole source of income. Um, that's showing commitment for sure. And then obviously buying shares in the open market. That's a good way to show it as well. Also, there's plenty of executives in the sector that, they might see this job as a temporary gig, whether it's CEO, CFO, VPX, or what have you, and they're looking for something better. This is just to pay the bills for a temporary period of time. And talking to these people, you can usually get that and feel that that's what they're here for. That's not obviously a check mark from an investor, from an investment standpoint. Track record. Everybody talks about track record, but track record really does matter, because the teams with the best track records get the lowest cost of capital. They get the best set of investors backing them, the lowest cost of capital, and very often they actually get the best project opportunities available to them. So understanding a management team's track record and who are the big shareholders and backers of the company, absolutely paramount importance to an investor in the sector. An example of a top junior mining management team presenting at this conference, Fireweed Metals CEO Brandon McDonald. I would say Fireweed has an exemplary management team, and they may not use the word boasts, but I'm going to say it for them. A management team that boasts integrity, good track records, strong financial backing, laser focus, and shareholder alignment. So really, it's like check, 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 check for Fireweed. Just three people I decided to call out. Chairman John Robbins has been involved in some big discoveries in the past. 5 million ounce gold deposit in the Yukon Coffee. And then notable recent successes include Great Bear sold to Kinross for $1.8 billion, and Kaminak sold to Goldcorp for $510 million. That was coffee gold deposit. So he's had some big wins. Brandon McDonald, he's a geo. He's got an MBA from Oxford. He's a native Yukoner. He's worked in investment banking in London. He's pounded rocks in the Yukon. I mean, it's kind of like a jack of all trades, and he's good at a lot of things. And he has been laser focused on Fireweed since its inception in 2016. 7 years at the helm, and the results are really starting to show. VP of Exploration Jack Milton has a PhD from UBC, and Fireweed is his sole source of income. So you have focus, you have strong backing, you have track record, you have complementary and high-level skill sets, right? Fireweed has it all, and the proof is in the pudding. Fireweed shares are up 165% in the last year. Meanwhile, a pretty good comp, probably the best comp I could find, South 32, a zinc major, is down 25% over the same time frame. So some significant outperformance from Fireweed Metals and making shareholders happy. And I feel like there could be more to come here. Now we get to the end of the presentation. I know this is probably a controversial view. A lot of people probably say, no, being a retail investor in the sector, you get screwed left, right, and center. It's terrible to be an investor in the sector. Maybe in the past, there's some truth to that. But I would say today, the playing field is as level as it has ever been. And actually, retail investors have a lot of advantages. Namely, remember I said they're more nimble. They can move around 5,000, 10,000 share blocks pretty easily, whereas a bigger investor, a hedge fund, or even a very wealthy person or a family office might have to transact 500,000 or a million shares at a time. And that's just going to move the market. That's cumbersome, and it's going to be hard to do in 90% of junior mining stocks. So being a smaller investor, you can be nimble, especially with the trading platforms that are available today, and the generally low cost of commissions. I say generally because not all brokers in Canada are low cost. Mine isn't. The hyper acceleration of information, the widespread adoption of social media. So you can literally get free information in your lap from very smart people that are willing to just throw it out there because they want to share information, they want to increase their following, or what have you. A lot of information, a lot of analysis is available on co.ca. Twitter, okay, we have, Mintwit, the mining people on Twitter. A lot of good follows on Mintwit. One of them is me at CEO Technician. And if you didn't know, I'm also at Goldfinger on co.ca. And then absolutely indispensable tool, I should write SADAR Plus. It's not just SADAR anymore, but SADAR in Canada. So this is all the public company filings. Everything about the public company is in these filings. They have to file it. It's the law. So it's all there at your fingertips to read through in your spare time, and you absolutely should in your due diligence process. And then, of course, your favorite stock charting software. You have all the tools for your success, and it's really generally low cost. I mean, even if you get level 2 market depth, you get a really nice stock charting platform. Maybe you subscribe to a newsletter writer down here. I think both of these, Joe and Eric, are both speakers at this conference and co-founder of the conference. I subscribe. I've learned a lot from these men. Put it all together, you might be talking about a couple $1,000s a year, right? And that's a pretty small investment considering what sort of returns are possible if you are an intelligent and profitable long-term investor in the sector. The lack of competition, it's just, this is a unique area, a unique little tiny corner of the global stock market where there's not as much competition. Hedge funds don't play in this space generally because it's just too small. And also just the returns in the past couple of years have washed out a lot of players. So right now, even more so than maybe even 4 or 5 years ago, there's less competition. We also know that the sector is cyclical. And simply reviewing a dozen or so charts out there of various junior mining stocks or even larger mining companies, we can quickly deduce we're definitely not at the top of the cycle. That's for sure. We may not be at the exact bottom, but we're probably a lot closer to the bottom than to the top from my assessment. So it's time to start paying attention. It's time to start doing your homework, sharpening your tools, and becoming a better investor. Perhaps most importantly, an individual investor doesn't have to benchmark or measure against some index, and you have no mandate to always be invested. You can go to 100% cash and stay out of the market for 6 months if you want. You can even stay out for a year. You can stay out forever, right? It's your choice to buy, to sell, to do nothing. And professional investors don't always have that choice. They have a mandate to be invested. They have a mandate to generate returns consistently for their investors. You don't have that pressure as a retail investor. So you add this up, you've got a lot of advantages in your corner. Use them. Final thoughts, closing thoughts. Never risk money you can't afford to lose, and always remember that the market is not here to fulfill your desires on your time frame. Emotions are the enemy of effective investment choices. The investor is simply a surfer that's looking for the right wave to ride, nothing more, nothing less. I think of myself as that. Sometimes I just stay on the beach, watch the waves go by. There might be a storm brewing and the conditions are not ideal, so you don't surf. You wait for the right wave, you do your best to hop on and ride it as long as you can, and then jump off. And always remember, your health is your greatest wealth. Never sacrifice that for anything. Thank you very much.